There we go.
Short notice. So we're very excited to have Charles.
Is that better? Oh, there we go. Well, where was I? Yeah. Bitcoin, blind, deaf, and dumb, but amazing. So anyway, back in 2013, we had the eureka moment. We went from $4 Bitcoin to $250 Bitcoin, and people started taking us seriously. VCs took us seriously. The markets took us seriously. The media finally started taking us seriously. And we watched this great industry grow. But here's what happens when people take you seriously. They start pointing out all your flaws. They point all the things you can't do. And that's where Ethereum basically came from. It was a project of frustration. All of us who created Ethereum back in the day, we worked on different projects. I worked on a project called BitShares, and Vitalik was working with Color Coins, and Jeff Wiltshire was working on Mastercoin, and Gavin was building his own thing. Joe was thinking about these things. He came from the legacy financial world. And basically, we had this problem where we said we want money to be programmable. We'd like, for example, when you send a transaction, that you can specify your terms and conditions. You can specify redemption conditions. You can create other assets like your own tokens and these things. And it turned out that on Bitcoin, this was super hard to do. It took us 6 months just on the color coin sides to figure out how to do basic stuff. Mastercoin was like 2 years in, and they still hadn't done anything interesting. So Ethereum was really the second generation. It was the let's make money programmable and useful. So just like Bitcoin, Ethereum was an experiment. We had no idea if it was going to work or not. We would have planned things a little differently if we actually knew it was going to be as successful as it was. We figured we'd build it, release it. A year it would fail, and then we can go back to our day jobs or something like that. But it turned out that Ethereum, just like Bitcoin, got really big, and it created an entire industry. It created the ICO mania. It created all these STOs that we now have. It created great products like Polymath. It created DAO. All these things that actually went into the mainstream. But now we're entering a new generation of cryptocurrencies. We're right at the edge of where we're saying, okay, we'd like these things to be useful for everybody, which means we can't just have thousands or tens of thousands of users. We're now going to have hundreds of thousands, millions, billions of users. We'd like these systems to actually talk to the legacy financial world. We'd like these systems to be in compliance with the legacy financial world. And also, how the heck do you govern these systems? So we're now entering the third generation of cryptocurrencies, and a lot of people are having a big discussion about how do we achieve that. So we're looking at things like scalability. We'd like these systems to get faster or at least stay at the same performance level as you gain users. An example of that would be BitTorrent. So, if you download a movie on BitTorrent, and there's a lot of people downloading it, you get it really quickly. If there's not a lot of people downloading it, you get it slowly. That's a very scalable protocol, which is why it carries a big chunk of the world's internet traffic. Similarly, you'd like a system where as more people use it, you get a faster transaction processing rate. You can do more smart contracts. You can have more assets. You have more capabilities. So we're looking for scalable protocols. Second, interoperability. So this is where System A needs to talk to System B. Has anybody ever used Wi-Fi? Works pretty well, right? Why? I'm here in Dubai. I'm an American. I have a Korean phone. Despite that, my phone can connect to your Wi-Fi. That's what we call an interoperable system. That's a good thing. Could you imagine if every country or every phone manufacturer had its own Wi-Fi standard? It would be a nightmare, right? Nothing would work. So similarly, it would be crazy if money behaved this way, where every system was fragmented and not operable, and my money doesn't work with your money, my card doesn't work with your card. Could you imagine payments and could you imagine transactions? It would be a mess. We used to live in that world, and we kind of solved it. So similarly, the cryptocurrency world needs to upgrade and update. So interoperability is the second requirement. And this is what the third generation is about. And finally, there's kind of a meta requirement for the third generation. And that's the who pays and who decides component. So these are decentralized systems. And we're not, as humans, so good at conceptualizing that. It's like when you have a problem with Windows, what do you say? Oh, Microsoft, solve my problem. When your iPhone doesn't work, you say, well, that's Apple's fault. When your Android phone doesn't work, you blame Google or something like that. But what happens when your Bitcoin wallet's not working? What happens when you're having trouble integrating with a particular protocol? There's no custodian, right? There's nobody in charge. So who do you ask for support? You lose your money, who do you blame? Furthermore, when you want to upgrade that system, who do you ask to upgrade that system to be more interoperable with your thing? It's not innately clear. And then there's all this great research we could do. If you go spend $50 million, $100 million, you can do all this science and write all these great protocols and make your system quantum resistant and so forth, because Google's computers are scary. Who pays for that? There's this thing called the golden rule. He who pays makes the rules, right? So the third criteria beyond scalability and interoperability, now that we're victims of our own success, is the who pays and who decides component. Who will pay to maintain these systems, upgrade these systems, and how do you do that in a way that doesn't centralize around a particular actor? And how do you decide how to upgrade the system? How do you decide what to do with the system? So it's a really rich and fertile time, actually, because it turns out that there's lots of competing protocols out there. This is probably one of the best times to be in the cryptocurrency space. When I joined back in 2011, it was very boring. It was you're either Bitcoin or a fork of Bitcoin. Those were your two options. There was nothing else. There were really no other altcoins. And the only thing we'd argue about is monetary policy. My token has 4 times as much as your token or something like that, like Litecoin to Bitcoin, for example. Then the age of Ethereum came in, and for the first time ever, you could actually do something. You could write smart contracts. That was really cool. But again, it was a toy because the system was too expensive. The minute you have a single viral application, like CryptoKitties, for example, the whole network collapses onto itself. But then suddenly, now we're entering the third generation where there's all these protocols that are coming out, like Algorand, for example, or Cardano, or Tezos, or others, who really do have a lot of merit and promise. And they're tackling at least one of these different design spaces. Either they're looking at scalability and they want to be really fast, or they're looking at interoperability or sustainability, or in some cases, they're trying to tackle all of them. And should they achieve this, they haven't just built a cryptocurrency. What they've done is they've built basically a platform that literally anybody, anywhere in the world can use without permission to build whatever they want to build. That can be a stock market. That can be, some sort of fund trade. It can be a VC in the sky. It can be a game. Whatever your dreams or your imagination happen to be, this is infrastructure you have equal access to, as I do, as do the people in Africa, as do the people in Argentina, as do the people in Asia. There's never been a time in human history where we've ever talked about a global system where everybody has access to the same thing and everybody is on equal terms. And that's why I'm in the space. I didn't really sign up to go ahead and replace the dollar. It's a good pursuit, but the people who try to do that tend to get shot. I signed up because I really want to innovate. I really want to change the world. And the reality is there's a lot of people living in the world right now who are excluded from the world. For example, if you go to Africa, the remittance rates there are extremely expensive. They're 8% to 15%. People send money probably from here home or London home or something like that. For every $100 they send, 15 just disappear. The lending rates are predatory. They're usurious, 35% interest to 85% interest. This is why some people want to ban lending, because it's so predatory and damaging to people. But this is a fact of life for not millions, but billions of people throughout the world. And we can lament about it, complain about it, demonize people. We can say, oh, well, these are all bad people. Or we can recognize that the world exists this way because of systems. And what we're doing in our industry is we're having a global conversation about what should the system for the 21st century be. We do this every century. In the 19th century, the British got to decide. In the 20th century, we fought some wars, and my country got to decide, the United States. And now the 21st century, the world gets to decide. Everything is reset. And there's no winners, there's no losers right now. A small country could decide, a big country could decide, China could decide, Switzerland could decide, Dubai could decide. It's neutral, it's culturally agnostic. Doesn't matter what language you speak, what race you belong to, where you come from. Everyone has an equal say, an equal access, an equal opportunity to use these types of systems, not just for money or finance. That's where we started. Ultimately, these systems are truth engines. They're all about recording what happened. Who owns the land? Where did you vote? Who did you vote for? The supply chains, your identity, the data associated with your identity, your property, consent for something. And if we can manage a protocol in a decentralized way, we can manage a corporation in a decentralized way. You can get rid of the CEOs. You can get rid of the board of directors. You can come up with completely new ways of running companies. It's really amazing when you actually start deconstructing what these systems do in a nutshell and how powerful they truly can be. Because at the end of the day, they're just about people. People coming together who don't necessarily trust each other, haven't necessarily met each other, and they have a common goal, common problem they want to solve. Maybe it's a distribution of a resource, or maybe it's how do you get consent to make a decision, or maybe it's we want to build a marketplace and trade amongst each other. This is ultimately what all businesses and governments are responsible for doing. The difference now is these systems are global first. They're culturally neutral and no one controls them. So that's why I'm in this industry. And as we move towards the third generation of cryptocurrencies, what's really amazing is for the first time ever, we're actually going to have infrastructure that can carry this load at a global scale. If we get it right, we could wake up just like the internet woke up 10 years later and have 5 billion users in the system. And just like the internet, no government will control it. Instead, it's infrastructure for you guys to build your businesses on, conduct politics on, to do commerce on, whatever it happens to be. And it's just amazing to see the innovation. Like we do a lot of business in Africa, for example. My company operates in 20 countries. We're in Ethiopia right now. And this is an economy that's growing at 10% per year, 106 million people, mostly young. 70% of the population is at or under the age of 30. So they have explosive growth. Young people are very passionate. They kind of hate their money. Most Africans do because monetary policy historically hasn't been so good. Resource rich and definitely a great promising investment. And everything's illiquid. There's no stock market in Ethiopia. If you're a successful Ethiopian business, cash rich, you know how you do your IPO? You have to leave the country. Go to South Africa or the Caribbean or somewhere else or here. That's not a good situation to tell somebody to innovate, to get liquidity, to actually share the wealth you've created with society. You have to leave your country and you can't share it here. So what if I go to them and say, instead of spending $5 million and going through the traditional system, you can now use this common financial infrastructure. Instead of having access to one market, you have access to the entire world market. and you're on equal footing with the people in New York and Tokyo, and the cost of doing this is software, which is open source and free. It's really an amazing conversation. And they say that must be fantasy. Well, 25 years ago, it was fantasy to have a magic device in your hand. You'd push some buttons and it would summon a car to you. But now we have Uber. So technology allows the world to change, and allows the world to change in ways that you can't predict, and in ways that really just make life better for all of us. And what's most exciting is that system can be built by anybody, as I've mentioned. It doesn't have to be built by me. In fact, most of the code right now we're writing for our work in Africa is being written by Africans. We trained a course of 23 Ethiopian gals, and most of them are working on projects in Uganda and Ethiopia. And it could be built right here. It could be built in Maui. It could be built in Indonesia. It doesn't really matter. That's pretty egalitarian and pretty amazing. So that's the space we're in, and those are the generations. We started with, let's try to build a fun little money and see if it's worth anything, and it kind of got a little out of hand and a little crazy. We're probably going to destroy the environment with proof of work, so we got to figure that one out. Then we said, boy, we want our money to actually be useful and do cool things, so we created the smart contract revolution. And then we said, boy, this needs to be egalitarian and work for everybody, and that's what this generation's about. And once that's done, just like the internet, we now have a blank slate for people to actually build useful and cool, interesting things. So I travel all around the world, mostly to do business, but also just to talk to people, because I learn just as much from you as you can learn from me. That's why I love holding these meetup groups, and I really appreciate that you all came here. So having said that, I'd love to get some questions from you guys, and thank you so much for listening.
Any questions?
Any questions about anything? Anything.
Hello, my name is Praveen. I work in Ethicella telco company. I just wanted to know what is the concept of color coin used in New Balance? Basically, is there any transaction fee associated with the color coin since there's no ADA exchange here?
So what is the concept of color coins with respect to the New Balance authentication deal we did? Yeah, so ordinarily what we would do is we'd issue an asset and then we'd write it as a Plutus smart contract. But because we haven't fully enabled Plutus on the Cardano platform, we used a slight hack where we said this particular set of ADA is colored, so it's treated differently than this particular set of ADA. That's an old hack from the Bitcoin days back in 2011, 2012. So it's a short-term solution until Goguen comes. But basically the idea is this token represents a shoe. And so then you have a pool of them, and every time a shoe is manufactured, somebody distributes the tokens and somebody connects that to the shoe. So you always have two. You have to connect the authentication token with the shoe. In this case, with New Balance, it's done at the end of the supply chain. So at the point of sale, the retail store, they get Tangem cards, which are basically wallets that are NFC enabled, and then they put that card in the box, and then we send a token to that card. And then that card gets linked to the particular shoe's serial code. And then those two things are connected permanently. So then when you verify that that shoe's correct, you need to have that certificate of authenticity. A later solution would involve a Plutus smart contract and a unique asset instead of a color coin, because it's just more efficient that way and it's clearer accounting that way. And then we'll probably embed hardware devices into the shoes as well. And we'll do that through a venture. Well, there's always a transaction fee for authentications. Well, there's a transaction fee to move the token, but to check a balance doesn't require a transaction fee, right? It's just like looking up a Bitcoin address. You go to an Explorer and you check that. But to actually move the token from one account to another account always will involve a transaction fee. Does that make sense?
Hi. So my name is Kashif and I work in Omnicom. So my question is very basic. We always hear that Bitcoin will, or this cryptocurrency will revolutionize the world. But the question is, there are two kind of crypto, like mineable and non-mineable. So when we talk about mineable becomes very difficult as the network grows and it requires a lot of energy. So if a system requires a lot of energy to run, how it will revolutionize the world and why it requires a lot of energy? Is there any other solution where you need much less energy? to run the
Yeah,
network.
this is exactly why proof of stake was created. Byzantine fault-tolerant protocols were created. So the problem with Bitcoin or any mineable cryptocurrency is it's kind of self-defeating. The more valuable you become, the more people compete. The more people compete, the more energy you spend. And any efficiency gains you get from new hardware, people just build more of the hardware as opposed to reducing the overall power footprint. So if you become a global scale system, as Bitcoin is becoming, you end up using more energy than a country. For example, Bitcoin uses more energy than Switzerland at the moment, which is a scary thought. So it turns out that why these systems are so expensive is that you kind of break it into two parts. One is the deciding who gets to update the system and then updating the system. The updating the system part, the part you care about, is very cheap and it's very energy efficient. You can make that as energy efficient as you can. The deciding who's in charge part is where all the competition occurs. Well, what if you could create a synthetic version of that? That's what proof of stake effectively does. And it just basically does it proportionally to your amount of stake and says, well, if you have 20% of the system, you have 20% chance to be in charge. And then once you're in charge, you can then either delegate that or use that. So this idea is not new. It's been around since about 2011. The first cryptocurrency to deploy it, I believe, was Peercoin back in 2011. It was a hybrid system. And then NXT revolutionized it again in 2013. And then what we did and others did is we started formalizing the mathematics behind it. So we're saying, well, we think this works, but we need to prove that it could be secure under reasonable assumptions. So we started in 2015 and we started with what is a blockchain, and we created a very precise mathematical definition of that. And then we started writing one protocol after another protocol after another protocol, and each version solved a particular problem. For example, the synchronization model or adaptive security or a bunch of these other word salad cryptography terms that people care about at academic conferences. But the long and the short is that the system we've designed can be global scale with just 10 kilowatts of power, which is about what a large home consumes, which is pretty good, right? And it doesn't require more energy than that to continue to scale. In some cases, it could be optimized and require less energy. So mineable or not, a proof of stake probably will solve the energy crisis. Now, there is a question of, does proof of work still have a purpose in this place? And I would argue yes, as long as you replace the wasted computation with useful computation. So instead of saying we're just going to dig holes and fill them up again, what you do is say, let's create a marketplace. And basically, you have these computational providers, and they get paid to solve difficult computation problems. So basically, you just create a big distributed computer, kind of like the Googleplex or something like that. And then you just create a marketplace, and that inadvertently also secures a network because you could kind of rig it that way and have hash puzzles and things like that. So useful proof of work is an area of active research, and people have been chasing it for years. And I think after proof of stake wins, if proof of work is to survive and mining is to survive in that conventional sense, it has to become useful. If it doesn't, it'll just completely die out because the cost is too great. That said, conceptually, it was a really good way to get everything started. You didn't have to have a pre-existing distribution. There was no notion of an ICO. You had to start somewhere. So you have to bootstrap the system. And it's actually pretty good math. Proof of work is a very simple system. It actually tends to be quantum resistant. It has a lot of great properties that are extremely hard to replicate. We've spent millions of dollars in 4 years and dozens of scientific papers attempting to replicate all those security properties that proof of work has. So it's genius in that, but its critical flaw is ecological in that respect. So I don't think that's a problem. It's more like saying, like when the computing revolution came out, we used to be on vacuum tubes. And there was kind of a threshold there with vacuum tubes. You couldn't get beyond something in terms of density and energy consumption and heat production. So you could never build a computer beyond that threshold. They'd say, well, this is the class of problems we can solve. But then the semiconductor came out, right? We had the transistor. And then suddenly we could go exponentially faster and we could solve all these new things. And now we're kind of reaching another threshold there. It's a theoretical maximum. And now we're developing a new model of computation, in this case, quantum computation, to kind of take us beyond that. So similarly, proof of work looks that way. That's the vacuum tube. It got the movement started. It proved the value of the system. It showed how these things could do. It created a decentralized ecosystem. It got people used to the economics of that. And now we're building the transistor. That's the proof of stake algorithm. And then something will inevitably replace that. That's the quantum computer. Probably a way to think about it.
Okay, I'm gonna ask a question that everyone can understand. so, So simply like, what are the industries that are using blockchain more than other industries currently? What's the awareness level again from the key opinion leaders? How is the awareness currently for the blockchain? And what are the key markets when comparing like global markets? What are the key markets that are advanced in the blockchain?
So the lowest of the low-hanging fruit is probably supply chain management. And this is a case where globalization is forcing people to change. So take a look at Ethiopia, for example. They're one of the world's largest coffee producers. So what happens when Starbucks wakes up and says, we're only going to buy coffee beans that are fair trade certified and sustainable farming practices? How do you fit that into a system where most people live on a hectare of land, and when they transport their beans, they put them on the back of a donkey? You know, that's the reality for 1.5 million smallholder farmers in Ethiopia. So then the government wakes up and says, well, we will lose market access if we don't start proving things. So then they say, well, how do we build a supply chain? And if you actually look at a blockchain, that's really a great example of a supply chain. You have transactions between checkpoints. You have known actors. You need a ledger that's incorruptible. You need ways of validating and auditing things. You need timestamps. All the things that you get with basically what a cryptocurrency provides makes supply chains very meaningful. And there are so many countries that suffer from terrible issues. Like I'm a big fan of Mongolia. We have some infrastructure there. I travel there often. I love camels and falcons, and I'll eventually get some for my ranch. And Mongolia has them in legion. It's a beautiful place to go. I'll show you some pictures of me actually, and during the break. But anyway, Mongolia has a terrible problem with counterfeit medicine, mostly from China. They're one of the world's largest consumers of antibiotics, and if you're in the rural areas, 40% to 60% of the antibiotics are counterfeit or adulterated. You could have pneumonia, tuberculosis, some terrible condition. You roll the dice, and half the time you're actually taking an expired drug, a mislabeled drug, or in some cases a sugar pill. So you'd like to track medicine, right? Well, blockchain can actually do these types of things. Now, in terms of large corporations, Maersk and Walmart and IBM, those are pretty big, are actually doing these things and rolling it out. For example, Walmart in the United States, the world's largest retailer, they are now forcing some of their suppliers to use their blockchain system for the sale of vegetables because they had a salmonella outbreak and they want to prove that these things are right. There's another venture called Beef Chain in Wyoming. They just signed a deal with the government of Canada, and all the sheep in the entire country will be put onto a blockchain. So there's a lot you can do in the supply chain. Another area which is very valuable is identity management. So we have this fundamental problem where the internet's broken. Vint Cerf and Bob Kahn, when they created the internet way back in the day, working for DARPA, that was a different world. This idea of mobile computing, this idea of like having billions of computers was an insane prospect. There was like 60 computers. So they were saying, oh, we only need 4 billion addresses. That's just crazy to begin with. And nothing's ever going to move. It's all going to be owned by big companies or universities or these types of things. And they asked about authentication. They said, well, it's easy. You just call them over the phone, right? That IP address will be in a book. In fact, the pioneers who created the internet even had a phone book for the internet. Each IP address was actually connected to a phone number. So you'd be like, who owns that server? You'd flip it open and be like, call that guy. You'd pick up the phone. So they didn't really think too much about how do we build an authentication layer into the system. Now, because they didn't do that, that's why e-commerce is super hard. That's why passwords are always broken. That's why the internet's so insecure. Because had PGP taken off and we actually had a credential layer, then when you go to create an account, you click a button. It just creates the account, and you can just sign in with clicking a button. It'd be very simple. But because we don't have that, you now have to have usernames and passwords and password managers, and you get hacked every 15 minutes and so forth. So there's been a lot of discussion of how do we redo the namespace, and how do we actually put an identity layer into the internet itself. And there's ideas like the decentralized identifier, for example. Well, what structure would you like to put that in? You need a revocation system, so a blockchain actually makes a lot of sense. That's a global business right there. Because it matters to all of us, right? We'd all like to have easy login. We'd all like to have secure e-commerce. We'd all like to have secure communication. Whether you're a business, a government, or an individual, that's very pertinent. And you either do it the old way, where you just trust Google or Facebook or some American company usually, or vendor, or a Chinese company like Huawei, or you can do it in a decentralized way where no one's in control of that, and you own your own data, you own your own identity. So that's another vertical that's very promising. There's been a lot of discussion about de-dollarizing the world. That's what Facebook was flirting with Libra, and Mark Zuckerberg got to learn how big the US government is. Welcome to the club, Mark. You know, when you live in a bubble, you tend to think you're big, but then you realize there's someone bigger outside of it. But anyway, the de-dollarization will happen. Maybe it'll take 20 years or 30 years. And what we don't want to happen is the dollar is replaced with the yuan or some other standard. What we'd like to happen is a truly global money system, right? We'd like a situation where no one's in charge and everybody maintains their sovereignty and has some say over their monetary policy. That's the ideal world. Well, the only way you're going to get there is by building a system that by design, nobody's in charge. So the killer app of blockchain is not necessarily one industry vertical. You can always find one to apply it, whether it be Cabbage or Spinach or Identity. The killer app is the concept of building systems where people do business with each other, but nobody runs the system. That's really the philosophical core of this, because we have all these collective problems in society, like global warming, for example, or other such things. And corruption's another example, and that can be metanational. Look at the World Bank, look at the World Trade Organization. There's a lot of organizations that aren't so good, BIS, IMF, and they sometimes aren't so good for the world, and you can't really get rid of the guys in charge of it, right? So then the question is, well, how do you build an alternative system? And the legacy approach is replace it with another strongman and hope that they're moral and vigilant and they won't be corrupt and so forth. And how has that worked for us as a species? It never has. So the idea of blockchain is saying, well, instead of doing that, there's a third option. Let's just put no one in charge and find a way to reach consensus despite the fact that no one's in charge. Kind of a crazy concept, right? But it's something that's magical and it's something that could happen. And this is actually something I think the developing world will lead, because they have to overcome these challenges. They have to band together. They have to create these coalitions and alliances. And we could wake up and have 1 billion people in a parallel system. That's much safer, much more resilient, won't be impacted by financial crises, and ultimately become richer and stronger than the Western world in that respect. So I think that's ultimately the long-term key application. Now, I, as a company, I have to make money, 200 employees to feed. I have horses, so I have to feed them. Horses aren't cheap. Even the scraggly ones are expensive, especially if you have to pay for their dental treatment. But anyway, so we have to make money, and we do consulting work, and there's ample supply of that. But the really cool stuff comes when you talk about these big meta problems, whether it be trade finance or global warming or corruption or whatever it might be, and building those types of systems. Next question. Yeah, how about you? All right, well, how about you then her? Or her? Okay.
From a more philosophical... Thank you, Fadi.
The ninja mic strikes again. You got to watch out for it.
From a more of a philosophical way of looking at blockchain and the ledger concept, it looks as if it kind of levels out or normalizes the opportunity in a certain ecosystem, and it kind of favors the less advantaged over the more powerful in a certain ecosystem, like, for example, the farming example that you've just given. How do you see the impact of that? First, sorry, it's two questions. How do you see the more powerful kind of, let's say, players deciding to be part of it? I mean, because there are foreseen kind of disadvantage to them. And the second part of my question is the impact on the economy when everybody is in that system. That's my question.
That's a good question. And if you look at the arc of history, because the only thing you can do is look to the past to try to project what will happen with the future. Whenever you have a disruptive new technology, initially you create some losers in the ruling class. Like, for example, when the Industrial Revolution happened, it really changed the structure of Europe. But then the really clever, smart, rich people say, well, this is like wealth creation. If we invest in this and we build infrastructure in this, well, then all this new wealth creation will capture some of it. And they end up doing really, really well. Like, for example, the world used to run on whale oil, and then suddenly kerosene came out. And the really smart people are saying, we should start a company that extracts that. And in 1870, Standard Oil was founded. By 1890, they owned the entire industry. And within 30 years, completely changed the world. So in a sense, the system is more egalitarian, but in another sense, you're now bringing 3 billion new customers into the world market, and you're bringing tons of new wealth into the market and tons of new people to sell to into the new market. So the incumbency that embraces this technology will make windfall profit from that. And they'll continue to thrive and grow and be relevant and be strong. And the ones who miss it will just be like the newspapers and the internet era. where they said, "Oh, this internet thing will never be big. Screw those guys," and they're not doing so well now, right? The ones who were smart about it, they got very quickly into digital media and they did okay. And in some cases, they made windfall profit from what they did. So what's exciting to me, though, is that whenever you expand the pie, that generally speaking is better for everybody. The 20th century was the best century in human history for poverty. We went from most of the people in the world being impoverished to most of the people in the world not being impoverished. In fact, if you look at every metric that the UN tracks for human wellness, whether it be infant mortality or people in extreme poverty, every 10 years, everything gets better. Steven Pinker wrote a wonderful book called Enlightenment Now, which actually systematically does this chapter by chapter. He looks at each index and shows you decade by decade by decade how much progress we really have made. And this is mostly because of the drive of technology. This technology creates new opportunities, creates new businesses, creates new ways to generate wealth. The more trade, the more production, the more opportunities, the more locking of human capital means the better for everybody inside the world. Now, what this does not do, however, is solve the wisdom problem. There's a big gap between the rate of technology and knowledge and the rate of wisdom growth. And what do I mean by that? Just because you have a great new technology doesn't mean it's good. It doesn't mean it's bad, it's neutral. Nuclear can be used for power plants or horribly destructive weapons. The advancements of biotechnology can be used to cure cancer or cause cancer. Okay, these things are neutral. So we as human beings have to have the wisdom to be able to use these systems properly. You hear a lot from Max Tegmark or other people talking about AI, saying, look how magical AI is and what it's going to do to change the entire world. Okay, well, AI can also be used to end all of us if we're not so careful or put us all out of a job. Well, similarly, blockchain technology, the things we create, can be used to give us a utopia, or they can be used to put us in a dystopia. China, for example, has a system called social credit. And their end goal is basically stamping a number on everybody's head. And if the number is really high, you're a good citizen. You get the good wife, you pay low taxes, you get the good job, you live in the good neighborhood, you drive the Mercedes. If you get the low number, you live in a camp. Nobody can talk to you, especially when augmented reality comes out, because then people can see the number on your forehead like a scarlet letter. That is not a fiction, it's a reality that 1.3 billion people will live under very soon, within the next 10 years to 15 years. Blockchain will be the single biggest provider and securer of that data. It's no coincidence Xi is blockchaining China. And what are they going to link it with? The People's Bank of China. So what does it mean? It means if your number's low, they can push a button and irrefutably turn your money off. That's an evil use of the very same technology that can lift millions of people out of poverty. So that's the cautionary tale. It's while these things are great, they can create great harm, whether it be physical harm, ecological harm, social harm, and so forth. And so it is a collective responsibility of the human race to build wisdom in parallel with the knowledge and the capabilities of the systems.
I have the question. Basically, I had two different questions. The first is whenever you hear about a new blockchain project in the whole ecosystem, what are the top 3 points, the top 3 checklists that you take into account to consider whether this blockchain project has a potential or is worthy enough to be considered for any kind of investments or any thought process that you want to study? And the second is about sharding technology. I mean, sharding, I believe, is an alternative for the scalability issues that blockchain is already having up till now. So, but it might resolve the scalability issue, but there are some security issues that are impairment with this particular. So is there another alternative layer that might be coming to replace sharding?
Okay, so in terms of due diligence on projects, first you start with what problem are they trying to solve? That's like 101, right? Just because you've invented new technology doesn't remove old business principles. I think this is what happened in the 1990s with the internet revolution. People are like, we'll ship 50-pound bags of dog food because internet, it will be profitable. No, pets.com is no better than anything else. So you have to have basic business principles and it has to make sense from a solutions viewpoint. Then in terms of technology, I mean, that's pretty straightforward. You say first, what is an engineering claim and what is a scientific claim? If it's a scientific claim, well then which academics are behind it and what process did they follow? I don't care if they have legendary reputation. You look at the process. For example, the tale of two scientists. There's Ataya versus Macaulay. So Ataya is kind of a personal hero of mine. I'm a mathematician by training, and he kind of did amazing things in mathematics. He won the Fields Medal, and that's the highest award in mathematics you can get. So Ataya woke up one day and said, I've solved the Riemann hypothesis. And this is like the greatest unsolved problem in mathematics. So we all get very giddy as mathematicians when we hear that someone's done that. Well, it turned out that the solution is blatantly wrong. And if we were just to look at reputation, we'd say, oh, well, maybe he did because he's such a prominent guy. But he's also old and getting a little demented. So there's a peer review process, right, that keeps us all accountable. Now, contrast that with Macaulay, who's also kind of an elderly guy. He's won the Turing Prize, which is the Nobel Prize of Computer Science. And Macaulay is an academic at MIT. Now, he created a cryptocurrency called Algorand. Now, he didn't just say, I've solved all these problems. He wrote a paper and gave it to the academic community. And he went through a proper peer review process, and they found some issues. He fixed them, and now he has a great protocol. So I always say, if it's a scientific claim, who did it and what process holds them accountable? And similarly, if it's an engineering claim, who built it, how is it built, and what process holds them accountable? And if those are all solid and they look good, and there's best practices to follow there, then at least we know that's pretty good. For example, there's a project called Harmony 1. And I often say if EOS did this, I'd have no problem with Dan. And they're great research consumers. They didn't really do a lot of research, but what they did is they took good research like Rapid Chain and RaptorQ and other ideas, and they just figured out how to build it. And they have a pretty good, well-vetted team that's writing decent code that I can read and look at and say, okay, they have something there. So when I look at that, I say, okay, that makes sense from an engineering or a scientific viewpoint. So the business model has to make sense and be a viable solution. The engineering and science has to make sense. And then finally, the social dynamics have to be right. What market are they launching into? How do they handle community management? What are the checks and balances in governance? This has been historically a big issue with Ethereum. The foundation was a bit too top heavy and it didn't have enough checks and balances and controls. Even we have dealt with this with Cardano. It's difficult to get good governance. So you always up front say who's in charge, how are they in charge, what keeps them accountable, what level of transparency do they have, how do they make claims, is there transparency on the financials, these types of basic things you would ask for if you're a VC or any investor, or you would ask for if you're a publicly traded company, right? Got to keep people honest. And if what factors keep these people honest and so forth. So if all those things are there, then I say at least they have a right to exist. Now, whether I'm interested or not is completely connected to the problem they're trying to solve. So if it's a problem I'm interested in, well, of course I'll read about it. If it's a problem I'm not interested in, it could be a completely legitimate, nice project, but I couldn't care less. There's nothing there. And what was your second question? Charting, yeah, okay, so that's a good topic too. It's something we think a lot about. So there's really three ways you can look at it. One way is to say, instead of having one ledger, we have lots of ledgers. And somehow they coordinate with each other. And then you just kind of have them balance, like almost like load balancing with an app. Okay. And we wrote a paper called Parallel Chains that talks about that. And there's plenty of ideas. F2 is pursuing this and so forth. Generally speaking, how those work is that you have some sort of master chain, like a serializer chain or a randomness beacon or something that's kind of the controller. And then it figures out how to chop up the world and gives it to each of those chains and allows cross-shard transactions to occur. The trade-off profile is you generally have a lot less Byzantine resistance. So instead of 50%, it's a third or a quarter. So you mentioned reduction in security. The other thing is if people don't follow the protocol, not only does it cause potentially harm, but it dramatically slows down the protocol. So Byzantine hackers have much more influence on the system. So you can tolerate less of them and they can cause more havoc to the system. And there's a lot of theoretical problems to sort out, but there's a lot of good schemes that are coming out that have good ideas. The second solution is to say, let's do it through some sort of external channel, like a state channel or a payment channel. So you'll see things like Lightning and Raiden, for example. And those hold a lot of promise because they recognize that not all transactions are created the same way. Okay, so microtransactions that you use to tip a YouTube video are distinctly different from the billion-dollar transaction for trade finance. So you should treat them differently inside a system. So what you'll do is generally batch and bundle those transactions and hand them off to some sort of trusted actor. And then you do something to keep that actor trusted. Either put a bonding system in place or federate it. And because you're doing it outside of the system and you're doing it in an economically sustainable way, you potentially could reach tons of scale. So we are actually developing a protocol specifically for that. And there's also T-Chan from Cornell and so forth. And in the lab, these things look really good, like 50,000 or 100,000 TPS you can achieve. So they're really interesting stuff. The third option is to get creative, where you say, okay, well, we're just going to handle certain things differently. So you may have seen things like snarks and starks and these other rollups like recursive snarks. And then you're basically saying, you're not going to worry about this giant computation that you're doing. We're going to take a small proof that you did it correctly, and that is what we're going to put on the blockchain. And all this other stuff, this 95% stuff, is just, that'll be handled by magic moon math, and trust the math. Another example would be multi-party computation. So let's say you want to play a poker game. What you care about is the money is conserved and the winners and losers are conserved. So you have an entry point, an exit point. The game happens somewhere, and then you just kind of put a hash on the chain. So there's all kinds of protocols that are being developed by companies like Starkware. We have some that we've developed. Zcash did Halo, that basically are a component of that. Now you asked, well, you know, which one is going to win? I think you can use all of them together. So ledger-based sharding is not incompatible with Lightning. It's not incompatible with Snarks or MPC. You can actually put all of these things in one system if you want to. Okay, and they all carry different trade-off profiles. So the first question you have to ask is, what is the system being used for? What are the nature of the transactions in the system? What are the nature of the users in the system? What is the expected settlement time inside the system? For example, if you're building a shipping system, do you need high-frequency transactions? How long does it take for an oil tanker to go from here to California? So do you really care if that settles in 5 milliseconds or a day? So every system has a different notion of settlement. Every system has a different notion of reversibility, a different notion of finality, and a different notion of throughput. So system segregation is another way you can achieve scalability, by just saying this system is simply different. And then doing as much as you can off-chain is another way of doing that. And that on-chain stuff is very precious. And this is the fun part of my job, is that we get to have a global conversation about all these things, and we get to really talk about the trade-off profiles. And there are some projects that are really trying to chase putting everything in one system. Yeah, like EOS, for example, they have this bizarre idea that they can do that. Okay, good luck. Other systems are saying we really should push a lot off the chain and use it to be very precious. Bitcoin, for example, with Lightning would be a model for that. And there are other systems that say, well, maybe we can't achieve high throughput. But then you also have two other scalability problems. It's not just about transaction throughput, also network and data. Let's say you have the world's best, most used blockchain. You'll end up having a yottabyte size chain. You know, it's like megabyte, gigabyte, terabyte, petabyte, exabyte, yottabyte. It's a lot of data, right? So who's going to have it? The NSA and Google. Just decide which one you want to get it from. So what does that mean? It means your system basically is centralized around the people who store that information. So that's not sustainable, right? So you need a different way of looking at these things. So data scalability is another big problem. There are some projects like Chia that are trying to solve that, Filecoin that are trying to solve that. And then another component is the network bandwidth. If you have tons of transactions happening, like gigabyte per second, who can keep up with that? How many people here have a 1 gigabit internet connection? Nobody? Yeah, not very common, right? Well, what if that was the throughput of your system? Well, then how would you keep synchronized with that system? You couldn't. You can only keep synchronized with the things you care about. So suddenly you go from a homogeneous system, a system where everybody's the same, everybody's equal, to a heterogeneous system where there's now different people. And in heterogeneity, you create kings, because certain people are more equal than others. They have more power than others, and they can shut you out of the system. You don't want to be shut out. So incumbent within the conversation of scalability is not just raw performance, but what do you do about the consequences of performance? And almost always it means you now have to admit that there are certain gatekeepers in the system. Going back to the old question of proof of work versus proof of stake, another advantage of proof of stake is it tends to create special actors who are permissioned, because the ledger elected them. And because you know that, they can now become not only consensus nodes, but service providers to run the Lightning nodes, the data centers, and the other things. And within that, you can create a meta consensus to keep them accountable for those types of systems. So this is kind of the fourth generation. After we achieve scale and interoperability and sustainability, it's more of a question of now, how do you keep them accountable to the consequences of a global system and keep the ethics and principles of the system intact? I guess I'll have a job for a while longer. Yes, ma'am. Sorry.
Thank you for your talk. My question revolves around the stability of cryptocurrencies. So while I do agree that we have to do away with nationalized fiat currencies, I kind of see that the role of central banks and their quantitative easing methods and how they kind of play with the supply and demand is important to stabilizing currencies. Um, so, so I would like to know how can we stabilize cryptocurrencies today? Because even some stable coins are pegged to the U.S. dollar, and they're not really that stable. So how do you see we can solve this problem?
Yeah, so the problem with stability is that it's always contextual to a basket. So like, how do we know the dollar is getting stronger or weaker? Well, we always have it in reference to something. We say, can I buy? So in the case of the United States, we have something called the CPI, the Consumer Price Index. What the government does is they put a big basket of goods together. They got the gas and the bread and all these other things. And they say, how much of that basket can you buy for $1? And if you can buy less next year, you've lost value. If you can buy more, you've gained value. And then they kind of set a target rate. And they say it should decay no more than this particular rate. So that's how we tend to do these things. So everything is always referential, and there's no monetary theory in the world that's going to give you perfect stability. If we had it, we would put it into fiat money, right? It's kind of foolhardy to believe that we in the cryptocurrency space can solve a problem the central banks haven't solved themselves. So the key contribution cryptocurrencies give to this world is something that Austrian economists and more libertarian economists have been talking about for a very long time. They've been talking about monetary competition, not replacement. So we had this in the United States in the 19th century. It was a very fertile time. We had over 200 private currencies in the United States. And what happened to them? Almost all of them went out of business in 30 years because once you become the money printer, you kind of go to God mode and you say, oh, wow, this is great. I can just screw everybody and print my own money. The Rothschilds did this. So it's not such a good situation. Well, the power of cryptocurrencies is it's an honest printing press. So you get all the benefit of private money and competition, but then you don't get the downside that a corrupt actor can mass produce money for their own particular benefit in a very opaque way. So what I imagine is going to happen is instead of getting rid of the euro or the dollar or the yen, we're going to create a portfolio. So when you live somewhere, you have a portfolio of value. You have silver and gold and stock and bonds, and you have currencies, and you as an individual decide that composition of that basket. Okay. And because we have sophisticated payment systems, when you go to Starbucks and you pay them, they get paid in whatever they want to be paid in. Maybe it's the dirham, or maybe it's the bear, or maybe it's the dollar. But you pay them in whatever you want to pay them in. You say, okay, I'm going to sell airline miles, or I'm going to sell a stock. So they're going to get a half share of Microsoft stock. And then under the hood, decentralized market making is happening. When you sell that, somebody's taking that, converting it to dollars or whatever the heck it is, and then giving it to Starbucks. And they're just getting it all, and it just happens in less than a second. So what does this mean? It means you live in a world now where you're in charge of your finance, of your wealth. And everything that could be tokenized, securitized, probably will be. You can, for example, do a reverse mortgage on your home and break it up into fractional ownership and go around and start selling pieces of your home. And the vendor is getting his dollars, and it's just happening real time. You can tokenize your work units if you're a lawyer and say, I'm going to take my 500 billable hours and turn them into a token, and then somebody somewhere is going to start buying them. The merchant gets dollars. You're basically trading your labor. This is the world that we're actually going to move to, and it's transnational. So when I come here, I can have my portfolio and spend gold and dollars and whatever. You get paid in local currency. Right? And so that, in a sense, will actually create much more stability than any particular central bank. A, because you have competition. B, you have efficient global markets. And C, always, 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 portfolio theory tells you that when you diversify, while your returns aren't as high, your decreases aren't as low. So you kind of balance out. And if you're very conservative, you build a conservative portfolio. If you're very aggressive and you're young and you're fired up, you build a very aggressive portfolio that has higher risk behind it. But it's a personal decision that you make. And I think that's what cryptocurrencies are doing, is the cost of maintaining that infrastructure is very low once all this infrastructure gets rolled out. Now, in terms of, is there an ideal money supply? I don't believe so, because money is like a fad. There's no money that has survived thousands of years. Gold has survived for a while, but it makes a terrible money when you actually start looking. It's a great wealth store, but it's a terrible monetary unit. And then the other thing is there's a close relationship between money and lending. Because if you want to get ahead in life and you're young, you have nothing. You just have your labor and your goodwill and your promise and your ability to do something. So then you go and say, if you invest in me, it's effectively what these things are, then I'm going to go trade my time, my labor, and my youth to pay you back and build something. That's effectively how that system has worked. And you can call it VC, you can call it something else, but there's that. So whatever money system you create, not only is stability important, but also it's important that you have the ability to raise capital to invest in yourself, whether it be your education or your home or your car, whatever it might be, to allow you to get to the next step in your life to become a better citizen and have more impact and so forth. So what's really cool about that is, that's kind of a decentralized private system that's not really fair. In the United States, for example, we have a student loan crisis. We have over $1 trillion in student loan debt, more than credit card debt. And this is really nasty, evil debt. We take young children with no ability to repay, and we lend them all this money at a reasonable interest rate. And then we tell them you can't even discharge it through bankruptcy. So they carry it on their head for 30 years or 40 years. It's a terrible situation. So then we think to ourselves, well, is there a better way of doing this? Well, if you had a financial system where anybody can build this portfolio, governments, foundations, charities, other people can actually give you special credits that you can then use to exchange for special goods. And the cost of that distribution would be very low. For example, you could create education funds and say this special asset can only be used and redeemed at this college. And the college gets paid dollars, but there's a whole system there. And maybe you can even connect it to social will. Like they say, if you go volunteer for 5 years in Africa, you get this credit and you can go spend it. So not only do you have the ability to manage inflation and deflation and manage your own personal finances, you now have a better interface for foundations, governments, and other actors to invest in you as an individual and grow you as an individual and to prove to the market that you're a person of character. And this is another one of the unique innovations that our space brings.
Hi. So thank you for coming. I want to ask you, what are you doing in Dubai? If you want to. I think it's on everybody's mind. And the second question is, you don't have to answer that, by the way. But the second question is that you talk about a lot about, what I like about you is that you're not too utopic. But at the end of the day, the sort of vision that you have is about giving power to the people and control and discipline, and you can invest in yourself, etc. But the fundamental, I think, ethos that the economies and governments are built is that you don't have full autonomy or full control. They control certain part of the economy, from fiscal policies to monetary to printing money, and deciding how the outcomes of the country is decided, and especially in terms of leverages and banking systems, your education, and how you pay, because this is how governments control. And the essence of a government is actually control. So in light of that, how easy do you see that? You talk about 10 and 20 years. I see it personally as even longer, if not another disruption comes along and just redirects everybody to a new technology or a new route. Especially when you talk about cryptocurrencies. I mean, today, for cryptocurrencies as well to become widely accepted, they need to become mainstream in terms of companies giving salaries in terms of cryptocurrencies. Today, I earn in AED. Someone in the US will earn in USD because of tax reasons.
All my Ukrainian contractors are paid in Bitcoin. They won't take the local currency.
Yeah, I
For
agree.
3 years, they haven't.
Yeah, but this is let's say 1% or even 0.5% of the total population. Today, it is not mainstream, and until it becomes mainstream, it becomes accepted. And then I can trade and build that portfolio. But my value right now is what the company, financial value is what the company pays me because I'm an employee. So in light of all this information, I mean, how do you see that? Where do you see it starting?
Right. Okay, so there's a lot of questions there.
The first question is the most important.
First Dubai. What am I doing in Dubai? I just love camels and coffee, and I figured this is a great place to have both. It's an opening market. There's recently been a big surge for blockchain, and usually I just come to a market to learn. Like last year, I went to Mongolia. First time. It was great. I met the president, the foreign minister. They rolled out the red carpet, and I went to the countryside, saw wild horses run by. There's 900,000 nomads in that country. 3 million people, 900,000 nomads. And I actually talked to the finance minister, and I said, how do you guys handle taxes here? And they say, well, if somebody gets too much tax debt, they just disappear into the deserts for a while. They become a Bedouin. So anyway, but it was a great educational experience. So Gabe Abed he's a good friend of mine from Barbados. He recently moved here, and he called me up. And he said, "You have to come to Dubai. It's just amazing. The people are amazing. The service is incredible. And oh, and by the way, there's a lot of opportunity here." I said, "All right, Gabe, I'll come for the camels and coffee and keep my expectations open." So I've had a wonderful time, and I really appreciate the hospitality and warmth that I've received here. I mean, just 6 hours we planned this. It's a packed house. Pretty crazy, right? That tells you this is a good country. This is a good market. In terms of the questions you asked about your system, and I don't worry too much about, well, when will they pay you in X? Getting back to what I was pointing out there, if you have a portfolio, your employer can pay you in dollars or AED, but then you can choose what that turns into. Like, what if you had two things, gold and AED? And then when you get it, you make a decision on your paycheck, I'd like 20% gold. You get gold in your portfolio, your employer is paying you in the national currency, but you're making a decision to have a portfolio like that. There's already financial services that give you the ability to do this. It's just this will become democratized over time. And then suddenly it becomes a cryptocurrency portfolio. The demographics I care about, the statistics I care about, like McKinsey recently did a survey, said people under the age of 25, 8 times out of 10 would rather have a cryptocurrency than a stock. So the young people like what we do. It doesn't matter if what we do is good or bad. Everybody's wearing jeans. You're all going to be wearing jeans. Good thing to be invested in. Similar is if the young people like cryptocurrencies, the cryptocurrencies are here to stay. So whether you like the asset class or not, it's the preferred asset class of the young, who will keep that preference as they gain age. Now, you asked things like control and, how will this transform and how do we help the little guy and these types of things. Harking on an old theme, I always view these things as neutral. And if I said that the only way this system is going to work is through altruism, it would fail. Greed and globalization are always forces that will win. So people are greedy. They want new customers. Why doesn't Africa have a banking system? It costs too much money to give people bank accounts with the legacy system. Compliance alone will eat away any hope you have of being able to bank somebody in Uganda or Rwanda or Ethiopia. And the governments have to work so hard just to even get a small percentage of people included in that system. What if you have a new system? Then suddenly you wake up, you have 100 million new customers, and all that locked up wealth in that country can be liberated. Entrepreneurs, governments, everybody wants that. They want to get access to that. They want new customers. So they need better technology to drive that. And entrepreneurs like me are making the case that this class of technology not only can provide that, it can provide it in a way that's mutually beneficial for both people. And when given a choice, people usually pick the good option. For example, if solar gets dramatically cheaper than coal, who would in their right mind want to build a coal power plant? No, I just love pollution. I love this supply chain. I just want to do this. No, they say, no, I'll go with the solar because it's not about being altruistic. It's about cost, right? The key for us is to make the cost of the system, the usability of the system, these things much better. That's what happened with the internet. How many people sent emails in 1985 versus 1995 versus 2005 versus 2015? Fundamentally changed, right? So similarly, this will occur organically as long as the technology is usable, it's good, there's great user experiences, and the cost of access is quite low. And then, the other terms of control, it ebbs and flows. New technology changes the world. New communication changes the world. One of my favorite pictures was from 10. It was King Edward's funeral. He was a English king, and when he died, because he was related to everybody in Europe, all the kings of Europe came there. So if you go to my Twitter feed, you'll see that banner where I have all the kings sitting there. What's so poignant about that is just 10 years later, almost all of them had been depowered or dethroned because of World War I. So you have this style of leadership, of ruling, and it says, okay, well, kings are in charge. This is how it runs. This is how Europe operates. And collectively, those men controlled a third of the planet. They were very powerful people. Then 10 years later, they're almost all gone. New philosophies had come in and replaced them. So those who rule, they have to have wisdom with what they do and realize that if they don't keep up with society and the times and where the world is going, they won't stay in power. The US government in particular is also at threat. We have this huge hegemony we've constructed. We have all this power we've built. The dollar is king. And our leaders aren't really doing such a good job right now. If you haven't noticed, nothing is working quite well, and our debt's gone from $4 trillion to $23 trillion in less than 20 years, which is just unbelievable if you think about it. And despite the fact that we have all this amazing progress and these amazing companies like Facebook and Google and Microsoft. Things are getting worse and worse every year with the way things are going. So if we're not careful, we could end up like that picture, and we can be just another footnote and be replaced by another faction. Now, very wise nations, they recognize they actually have to diversify and invest. If they're a monoculture on one part of the economy, they have to diversify and have other things. If only one part of the population is being invested in, you have to invest in all the population, or at least more of the population, and so forth. What's really attractive about Dubai is this government's already recognizing the power of blockchain. And I think by 2020, they want to push a lot of the government services in that direction. So it's rolling out an invitation for entrepreneurs like me to come in and give advice. And I'm competing with the Chinese and the Argentinians and the Africans and the Europeans and the other companies and so forth. And they've had all the people come. So the smart, wise people will survive. The ones who aren't so wise will get eaten. And that's just how the world works. We can't stop that. That's inevitable. What we need to do is just make sure it moves in the right direction. And you look at metrics like, is it fair for everybody? The old test is remove the names, remove the people, and make it all random. You could be reincarnated and become somebody else. Would you take that deal? If the answer is no, then you don't have a fair system. That's the test. Okay, so you don't know if you'll be the king or the peasant. You want to be that.
Hello, I work in a real estate here, and I'm a broker. And my question is, what do you think, will it affect the investment market, such as real estate, gold? Because we can see that the new generation, they really love everything about digital. And as you mentioned, even Dubai, here in DLD, where everything is blockchain already. And how do you think it will change the investment world?
So here's my number one problem with investments. My grandfather on my mom's side, he started after the Korean War as a lineman, and he worked his way up through Time Warner Cable and actually retired an executive, never went to college. Despite the fact that he never went to college and he started at the low end of the economic spectrum, he retired a millionaire. Now, he didn't do it through magic, he did it through investment. Raised 7 kids, 5 boys, 2 girls, and his wife stayed at home. But religiously, he put 10% of every paycheck into an investment account. And the markets grew, and he was in a good time in America, the 50s and 60s and 70s and 80s. And so he appreciated the value, retired $6 million. Okay? Now, anyone can do that if the system is good. The problem with the American system, the way the financial markets are moving, we all now are just getting systematically poorer because of inflation, and it's getting worse and worse. And the investment opportunities we have are getting worse and worse. In fact, in some cases, we have negative interest rates where the banks pay you to take loans. That is not a good thing, right? This is a crazy, crazy system that we're moving into. So there's a global awakening that the financial products we have, the financial opportunities we have today are not good for the middle class or the poor. They're good for me. Don't get me started about the orange man. We're not going to talk about that one. But the investment opportunities we have as a culture aren't so good, and they're great for me as a rich guy because I get first access to the money and I get opportunities you guys probably don't have. But for poor people like my grandfather or others, there's no way to get ahead. You spend more money than you make, you get poorer and poorer, and you become more and more in debt. You effectively become an economic slave. So your question was, well, what will this do for real estate or this market or this market? It's all about unlocking liquidity and making that liquidity democratizable and those deals democratizable. Because there's tons of things in the world that could have great returns, 10% here, 15% here. I was just talking to a guy right before I came here about batteries that could be used for energy storage on grid scale, and they're thinking they could create financial products that have 10 to 15% returns per year on that. And those can be fractionalized so that people like my grandfather could buy that. And it's the same for real estate. The problem with real estate, it's a good market for those who understand it and those who are wealthy. If you can't understand it, you're not wealthy, you can't play. You can't get those good returns. But if you can securitize it and fractionalize it, suddenly I could buy real estate in Mongolia. I could buy real estate in South Africa. I could build these big diverse portfolios that are well hedged or well constructed. And I sacrifice maybe 20% of the returns, but then I don't get exposed to a lot of the risk. And then sovereign funds can come in and help us. And then suddenly I can stay ahead of inflation and retire like my grandfather did. So I think the key here is whenever your system is making people poorer, you have a bad system, you need to change the system. And one of the things that we're doing with cryptocurrencies is we're acting as financial engineers. So we're mastering the art of new financial products. Unfortunately, that does mean that people are now exposed to more junk, more risk. So there is a big marketplace for due diligence. There is a big marketplace for keeping people honest and making sure people are properly regulated, because we've seen with ICO mania that things can go so wrong. But on the other hand, I think the goods outweigh the bad. Now, in terms of real estate in particular, there's dozens of blockchain projects that you can look at from I think it's Trust Chain and others. There's hundreds of them floating around that are trying to do just that, securitize real estate in various different jurisdictions or democratize access to real estate. I'd encourage you to look into that market if you're curious about how those things work and models that may apply here. The other thing is the regulations are different in every jurisdiction. I'm not familiar enough with UAE regulations to know what's lawful here and what's not lawful here. So you'd have to look into that as well.
Hi, Charles. Pleasure to see you again. I have actually, I guess, first one comment, and the second one is 3 questions. The first comment is welcome, and it's a little bit about what you said about hospitality. Arabic, or I guess you can say Bedouin hospitality, is for the first 3 days they serve you the best meal, but they may kill you on the 4th day. Back to serious
Lucky I'm flying out on the 4th day.
So first point is, blockchain and crypto to some extent is a technology of trust. So I would like your views on that. That's first one. Second one is something you already addressed, but I want you to maybe expand on it, which is going from crypto towards what I call enterprise blockchain, which means having a much more variety set of use cases. And the third one is kind of a regulatory / political question, in the sense that your dear president actually created this regulation that outlawed the petro, which to some extent could easily be used as a template to outlaw other cryptocurrencies. Once the template is drafted, you just replace. It's like a MOU. So I would like your thoughts on the reuse of that potential legislation to maybe outlaw. I will not name the cryptocurrency, but the flavor that is convenient to outlaw.
Okay, so we have the cryptocurrency outlawing problem, and then the other 2 were a little tired and haven't eaten in a few days.
No, yeah, it's been a long. I can see the time zone difference. The first one is about enterprise blockchain.
Oh yes, and then,
before that was about trust.
yeah, okay. So
what I mean by that is my background, mathematician and cybersecurity. Although,
what field of math did you study?
All of them, but the trouble with math was that even on the 4th year, I remember going to the teacher, says, "Why the book does still say introduction?"
By the way, there's a big problem of trust in mathematics. If you study,
that was because my background is cybersecurity.
Okay.
So although the mathematics of crypto are good, the whole system is still fairly broken, because last year $2 billion kind of evaporated. That's what I meant by the question, in the sense like, what can we do to make trust better beyond the mathematics?
Well, first off, just as a side note, when you start studying math at a high level, you realize that all of mathematics sits on a very shaky foundation. You may have encountered Gödel's incompleteness theorem and Shadung's problem and these things. So you start realizing that no matter how big your system is, it's never complete, and that there may be statements in your system you can never prove. The other thing is you can just arbitrarily change things. You can write new axioms. Math is great. I love math. But anyway, about trust. So the magic of blockchains is that the core of all of it, you're saying a bunch of people are going to play a game together and they don't trust each other, but somehow emergently within the rules of the system, trust emerges. Somehow. Okay? So if you get it right, that means suddenly those people can conduct commerce with each other. So ordinarily how we handle trust is we create consequences for lack of trust. So we say, here's a market, go play in the market. Now you certainly can be very dishonest. You can be Bernie Madoff and do all kinds of nasty things. But then eventually some guy with a big stick is going to show up and throw you in jail for the rest of your life. That's the hope. And the fear of that keeps you in line. Okay? What blockchain does is it says we're going to, instead of build a system where punishment is your incentive for not misbehaving, you physically just can't do it because the rules of the system prevent you from doing that. And this is a very new way of governing things. It's not really that easy, and there's only a certain class of problems that you can solve with this. But of those classes of problems, that's pretty magical. And that's not just applicable to a global system, it's applicable all the way down to a micro system. Let's say you're Samsung, big company. You have all these divisions, and then every year, because you're audited, you have to balance the books. And every year they do it. It takes months, millions of dollars. It's a very expensive reconciliation process. And at the end of the rainbow, money's missing. At the end of the rainbow, things are missing. And you're just like, well, is what it is. It's good enough. Well, what if you put all those accounts on a blockchain and you can do real-time continuous auditing, for example? So the very things that work global work micro and can give you the same benefits of that reconciliation that occurs. So the enterprise blockchain space is just asking that question of which was global, what would work better micro, and how do we get those systems and those characteristics to work well within that scope. And that can be a federation. For example, telcos. In America, we have AT&T and Sprint and T-Mobile and Verizon, and I go between their towers. I'm a customer of one of these entities. So what happens when I go from a T-Mobile tower to a Verizon tower to an AT&T tower? Somehow they have to move me as a customer around and handle all that data and that movement. Well, blockchain is actually a perfect transaction mechanism for that, right? Because it can manage the movement of a customer, and these companies don't trust each other. They don't want to share customer information. They don't want to share as little as they want. Same for banks. When Wells Fargo sends a wire to Chase, sends a wire to Bank of America, they don't want to show the ledgers accordingly. So the old solution was God mode. You trust somebody, SWIFT or this settlement system. The new system is keep everything private, and this meta protocol can handle the brokering and movement of people. So this is the relationship between trust and enterprise. And I don't really see it as two different systems. I don't really see it as the permissioned and permissionless system. I see it as all one spectrum. And ultimately, you're just talking about the movement of value and information and people between one system to another system. That's effectively what interoperability is all about. Wi-Fi is this way, right? You move, one system to another, so you just seamlessly move. We'd like that system to work that way. 4G is certainly like this. You move from one system to another, you don't even feel it. You can change towers 50 times in a day. You don't even recognize it. You don't notice it. So that's where we're going with that. And then what was the last question? You were... Oh, who cares about that? So Trump, here's the thing. The founding fathers were smart enough to create a checks and balances system in our government, and they actually created two levels of checks and balances. So they first created a checks and balances at the federal level. We created a tripartite government. So we have a judicial branch and a legislative branch and an executive branch, and they all keep each other in check. And they said, oh God, what happens if they create a detente and all these things get together and they start working together? So then they created a feedback mechanism on the state side. It's called a constitutional convention. So we have these two control levers. And right now, Trump is kind of coming in and smashing things like a 5-year-old and having fun with being in power. And what's happening is the government is treating him like an infection. And they're actively trying to purge the infection. So the courts are going to force him to release his tax returns at some point. And there's an impeachment hearing going on, and his own administration is working against him, in some cases preventing him from even executing executive orders and so forth. And every president tries to push their boundaries. Obama did, and Bush did, and so forth. And then what happens is when they push too far, there's a pushback. So for example, the executive outlawing of an asset is probably unconstitutional. And no one will really care when we do it to Russia or Venezuela, but they'll sure as hell care when we do it to American citizens, and there'll be a judicial pushback for these types of things. And eventually it'll write itself out. Now, if it doesn't, at some point the states will get so pissed off, they'll rewrite the Constitution and completely topple the federal government. We're close. We only need 2/3 of the states, and 20 are already down for a constitutional convention. And we're already starting to innovate at the state level. Like, I didn't like the laws of America for blockchain. So what did I do? I worked with Caitlin Long and Tyler Lindhelm and the other guys, and we changed all the laws in Wyoming. And now we have a state in the United States where soon the government is not legally allowed to give your private key, to ask you for your private key. How about that? We rewrote the Money Transmission Act for the state. We rewrote all the laws. It's a great part about being American. If you don't like your government, you actually can change it if you're clever about it. And you change it in Wyoming, we have 2 senators, same as California and New York. Very powerful if you look at it that way. So there is a state level pushback, whether it be for drug prohibition or whatever it might be. For financial prohibition, it's the exact same way. And there's some diversity there, right? So it'll all sort its way out eventually. The contagions that have infected the government will eventually inflame their way out, either through election or impeachment or just term limits. And then we move on. The important thing is the system is fairly resilient. And if we do a really bad job, the system collapses. And we might actually get to that point. And you know what will happen? We just pick up where we left off and rebuild. We did it after the Civil War. We can do it again. It's America, the best country in the world. Well, yeah. And the founding fathers were all rich people. Yeah. They already did. They voted on them. They're laws. The governor signed them. The legislature voted on them. We proposed them. They wrote them. Entrepreneurs can do that. Citizens can do that. And actually, there's many cases where people who didn't have access to capital got laws changed all the time. Look at the gay rights revolution inside the United States. Not exactly a very wealthy demographic. They still dramatically changed the United States. The same for the legalization of marijuana. You don't have to have access to capital. It does help. I'm not going to lie. I am a constituency. But remember, I didn't have access to capital 10 years ago. I was poor. I lived on $1,000 a month. My industry made me rich, and as a consequence, I now advocate for my industry. This is why entrepreneurship is such a great thing, because it changes the social order. What brought the kings down was not revolutionary peasants. It was the rise of the merchant class. They got power, and they suddenly said, why are these feudal lords ruling over us? We should probably change the way things work. And why is this church so powerful? We should probably change the way that that works as well. And this is the ebb and flow of society. And then when the wealthy people get too crazy, they start getting too predatory, and then the people rise up and replace them as well. It's a cycle. It's always a cycle. And also, there's the collective access to capital. Where did we get our capital from? Through a democratic process, the ICO mechanism. Raised money for Ethereum. We created wealth for millions of people. And then suddenly, those millions of people now support our industry, and they have wealth now. So collectively, we're constituency. That's the power of financial markets, is it brings people up. And maybe any individual doesn't have access to capital, but suddenly now, collectively, we have access to capital, and we can go and do great things. That's why I love the idea of a headless company. Because then you get rid of the CEO and the board of directors, and it's more just this philosophical cooperative web. And collectively, it's worth billions and billions of dollars. And if it's steered in a particular direction, it's like a swarm of locusts, and it can overcome anything. Switzerland's another example of this. You know, Switzerland's a super conservative country, and they couldn't care less about all this newfangled digital financial innovation. Then suddenly all these young kids started showing up, and all this money started flowing in a very decentralized way into Switzerland, and billions of dollars filled up Zug, and suddenly the Swiss said, maybe we should change our laws. Maybe we should embrace this industry. Maybe we should stop being so conservative and live in a 500-year-old system and actually upgrade and modernize, or else Liechtenstein will get it, or Singapore will get it. Now, was this some billionaire somewhere who woke up one day, you know, and Rupert Murdoch and said, no, this is the way we're going to go, or Bill Gates? No, they didn't show up. Young, poor kids who became wealthy off this system. So yeah, okay, it's fair to say I have access to capital, but you have access to capital. You all have access to capital, because the point is, if you have a good idea, the system can fund that idea and give you collectively the mandate and power of millions of people. And it can do this in a matter of months or days. The Ethereum ICO lasted 42 days, I think. Gabe, you remember how long was it, 42? Yeah, something like that. Can't remember. I think it was 42 because of the meaning of life, right? From Hitchhiker's Guide to the Galaxy. Yeah, they were like that back in the day.
So I have a question.
Yes, sir.
When should we buy ADA?
What was that?
When should we buy ADA?
I don't give financial advice. But I believe in my products.
So thank you for your talk. I have two questions. First, being that we're an Omnicom media group right here, it's a media agency, so we do a lot of digital marketing. So I was wondering your thoughts on the role of blockchain in digital marketing, considering that most of our investments are going into walled gardens, and there's a lot of opacity in it that we don't see the true supply chain in digital marketing. So one, the role of blockchain in digital marketing. And second is the idea of control of data, which I believe is one of the biggest issues coming into the 21st century, where currently you have Google and Facebook who absolutely own all of our data. They crunch it up and then sell it up, make money themselves, where we don't at all. So again, the role of blockchain and us and the people controlling that data back to them.
These are two really good questions. Generally big things happen and they create ripple waves throughout all parts of society. So back in 2007, this Harvard dropout started some company and it grew like a weed and it got so big and prominent, it ended up having billions of users. And we call that entity Facebook. And that has a huge, huge impact on the world. And the politicians and normal people, they didn't really think too much about it until 2016. And they realized that this platform could actually influence who wins an election. And they said, oh, that's not so good. Maybe we should regulate that. So all these books have been written like Age of Surveillance Capitalism and so forth. And we're talking now about self-sovereign identities and we're talking about data ownership and so forth. And really there is a collective global conversation where people are starting to realize that if the product is free, you're the product. If you use it, what you're giving in exchange for it is information about you, and which in case is being used to micro-target you for advertisement. Cambridge Analytica, you can go down the list. There are many. And that's just on the commercial side. It's also being used on the intelligence side for targeting of people. And that's pretty dark and dystopian. So the first thing is the question of, can you run these social platforms without a central controller? Like, could you create decentralized Facebook or decentralized Twitter or decentralized Reddit? And there's been some attempts like Steam and so forth. And can you do advertising in different ways, like what Bats is doing with the Brave browser, for example? Now, the point of that is that that gets rid of the walled garden and it creates an open ecosystem for people to build things into. Second, the control of that information and data is now, instead of being owned by a central entity, it's being pushed to the edges. So we actually own our data, we own our identity, we own our information. And when we want to monetize it, we choose how and who will be monetizing it, and then we get a share of that profit. That's what BATS is trying to achieve with the basic attention token. So I think business model innovation needs to happen, and we do need to think around better user experiences. And frankly, if we get it right, then what you can do is kind of build basically these on and off ramps into one global system of people's data that aren't controlled by just one entity. And you as an entrepreneur are just building interfaces to that, but you're not in control of it. And as a consequence of having that interface, maybe you get some value to that. Maybe your products sell or something like that. It's a complicated puzzle. And, after we're done with Cardano and we do something in the privacy space, we'll probably do a social network at IOHK. In which case I'll have a significantly better answer for you about how to do this and what to do with it. But in lieu of that, I can say that many people are thinking about it. Many people are talking about it. There are actually government mandates like the right to be forgotten and GDPR and other things that are starting to occur and be replicated throughout the world. And as a consequence, it's a problem that we're going to be facing in the next decade. It'll probably take the entirety of the decade for us to solve it. But one thing I think is clear is you have to own your own identity. You have to own your own data. You have to consent to be mined. And if people are making profit off of you, then you should get some share of that. Your data is the new oil. I think those are the basic principles that we have. And then there's a question of right to be forgotten. If you want to opt out and leave a system, well, then you should have the right to do that. The financial regulation is actually very evil in this respect. They have these KYC and these AML requirements, and they say, get to know everything about this person and then hold on to that data for 7 years. Okay, what happens when they get hacked? Then all your personal financial information gets lost and now it goes into the cloud. And we've seen a lot of cases of where that's occurred. I'm sorry, if the US government can't even keep secret who has a security clearance and what's on the SF-86 form, they can't possibly tell the financial industry to know everything about you. So there does need to be a change of the data warehousing side as well, of who stores that and how that works. The good news is we're starting to invent new technology, like trusted hardware, for example, where your secrets can stay within a trusted hardware enclave. And when you get forgotten, it gets erased from the enclave, and you get a proof that it was never copied, and you get a proof that it was securely erased. That's an example of something you can do with trusted hardware like Intel SGX or ARM Trust Zone or so forth. And that's in your phone. It's actually built into Samsung phones and other such things. So I think with those emerging technologies and better cryptographic techniques, we'll probably get to a world where we can start enforcing self-sovereign identity, the right to be forgotten, and actually create data marketplaces and so forth. But it's going to be a hard road and a long road. And the problem is that there's an entire industry that exists now that has incentives to prevent this from existing. That's the Googles of the world, and unfortunately the Microsofts and the Amazons and the Facebooks. So they're going to let that go with their cold dead hands. And so it's incumbent on us to build superior business models and experiences and MySpace them, get rid of them that way.
Hey, good evening. I was actually going to ask his question, but I have something on top of that actually. So what's the limitation of this blockchain technology right now then? What are the limitations? Is it in a very pre-pubescent stage, or is it more advanced than it is?
Yeah, that's why I mentioned generations. So generation one was just all about, will these tokens ever even be worth anything? And will marketplaces emerge? And can you even build one of them, right? Like building the first rocket. That took quite some time. The first plane took quite some time too, right? There's a lot of death before that. But then 50 years later, we had jet aircraft. Wow. It's amazing how fast things move. Then the second generation was saying, well, hang on a second here. Transactions are not dumb things. They're very complicated. A transaction has 5 characteristics to it. You don't just have assets that you're moving, whether that be gold or information or property, but then you also have actors. So you have identity. You have metadata, which is the story behind the transaction. Why are you doing it? Where did you do it? There's the contract, which is the terms and conditions. And then transactions always live in a regulatory environment. There's rules that you have to follow. So you needed a system where you could program that into it. So you needed a smart contract that you can embed these types of things and build templates so you can actually interface with the modern world. And we've done that. Now the next generation is just doing that at scale, doing that so it can talk to everything and doing that in a way that it's sustainable. So you don't always end up having Bitcoin Cash and Ethereum Classic and all these forks that take value out. So we're right at that transition between the smart contract era and the third generation. We're at like 2.5. And all these third generation systems are starting to turn on or evolve into that. And once that occurs, we'll be in that nascent period for a few years, and then we'll exit that period and start entering the build on top of that infrastructure stuff. Just like the dawn of the internet. You started with all these universities and military bases wired together, and then eventually it started getting more democratized, but you needed a lot of infrastructure to be built before you had that explosive growth. You needed the web browser, you needed the cookie, you needed e-commerce, you needed all these things to actually work and the fundamental technology to be there and the browser to be programmable. You needed JavaScript in the browser. And then when all that was there, suddenly you have Amazon and Facebook and Google and all these great web companies. And they came in the late 90s and early 2000s. They didn't come in the 80s and 90s because the infrastructure could not support them. So we're exiting the infrastructure period as we enter into the third generation, and we're entering into the application period of the ecosystem. And that'll last just like today, 10 years, 20 years, 30 years, because people just keep building. And at some point, we'll extend the infrastructure too far, and then we got to go back to the drawing board, rebuild it. And that's where the fourth generation is coming. And they're doing that with the web right now. IPv6 and replacing TCP with QUIC and all these other things because the web is broken. It just can't handle what we've built on top of it. And that's the same thing that'll happen with us. Well, but that's what always happens, right? You get this beautiful home and then you start inviting your friends over and then you have too many friends and too many relatives. And then suddenly you go from 2 people to 20 people in the house and you're like, I need a bigger home. I can't kick grandma out. I bought a beautiful ranch. I've noticed more and more people just start appearing on my ranch. And I now need more space in my ranch. I don't know how that happened with a 50-acre ranch, but now I do. So similarly, when you build beautiful infrastructure that's really useful and it's egalitarian and democratic, more and more people just start showing up, and then you reach capacity. And then you need to rebuild the infrastructure to accommodate the new capacity. This is the endless cycle of progress and the endless cycle of democratization. The point is, though, that generation 1 and 2 were conceptual. They were proving out the concepts. They were showing these things could work. And what the third generation about is scale. It's saying give it to everybody and let them do stuff with it. They're going to do that stuff. They're going to blow stuff up, and it's going to be like fun and crazy. And then they're going to go back to the drawing board 20 years later and say, God, we need to rebuild all of it. Just like we're doing with the internet right now. In the 90s, after we achieved that nirvana, we reached the point where you could actually do stuff. The internet broke. And now we're trying to fix it.
Charles, we're going to have plenty of more questions, so let us know when you've had enough of our hospitality, right?
All right, how about one more question? How long have I been going, out of curiosity? Oh, okay.
Thanks for coming.
I haven't eaten in a few days, so I'm feeling good.
Thanks for coming. Actually, I'm from India. So
what part?
Hyderabad, south.
The south.
Yeah.
Okay.
Imogo also, I think, working there. Imogo India. They are doing some educational things there. So okay, actually, now my question is, government is not supportive in India related to cryptocurrency. So now I'm in UAE, so I can be invested. So once I go back, so what should I do? What do you suggest?
Well, this is the unfortunate problem when you deal with governments that aren't so wise in the way they structure policies. They just make boneheaded decisions. I will remind you that in the United States, until 1992, it was illegal to sell things on the internet. It was called the NSF AUP, National Science Foundation Acceptable Use Policy. So until 1992, if you were Amazon, you were a criminal. In the United States on the general internet. Think about that. So things change, and they change very quickly, and they change quickly when people start realizing that there's a social benefit, a societal benefit to the people of the country. And if a government is so pig-headed and so stupid about this, at some point they actually get replaced. Just they're voted out of office, or there's a revolution, or something like that. So at the end of the day, India's got a lot of problems. I mean, they have to create a national ID system. Aadhaar was not really a good thing. It didn't roll out properly. There's all this corruption. There's all this social benefit. There's environmental problems. The e-waste problem is huge in India. There's a lot of issues there. And it turns out that what our industry does is provide solutions to those problems. So the best way of propagating something is don't talk so much about the technology. Focus on the problems and the solutions. Walk in and just say, look, you have this problem. There's too much pollution in the river, or there's too much bad air, or something like that. I'd like to deploy something to solve that. And then build partnerships and coalitions around that. Get Tata or something behind that and say they're going to come in and help. Then suddenly you wake up and you're not talking about blockchain or crypto. You're talking about this particular problem that affects real life people. You have a coalition behind that. Oh, and it just so happens there's a blockchain at the end of the rainbow. And then you win the PR fight because you deploy it and it works, solves a problem. And then the government says blockchain is bad, and you say, well, but what about this problem we just solved? They say, oh, well, maybe it's not so bad. That particular thing is good. They say, okay, what else is good then? And you pick another problem, you pick another problem, you pick another problem, and you wake up, you've solved 50 problems. And then suddenly the cultural perception changes a little bit. And if it doesn't, the people who hold that perception eventually leave office or die. Some cases, it can be endemic and pervasive. Racism is a great example of that. You can't beat that with innovation or progress. You just beat it by waiting for people to die. We ran into that in the United States. You had all these really racist politicians in the South, and you could never convince them of the dignity and value of a black person. They just always viewed them as subhuman. What did we have to do? We had to wait for them to die or get voted out of office. That's life. That's how this stuff works. So you have to be patient, and you have to understand that progress can only be pushed so far. So you focus on the kids then, and the grandchildren, because the parents can't be saved. And if this is India, well, focus on the kids, focus on the young, focus on those who aren't yet so dogged in their ways and have these perceptions. The advantage that India has is that it's the world's largest remittance country. And what that necessarily means is there's more Indians living abroad than any other ethnicity. So they're all over the place. The CEO of Microsoft is from India. Okay, so if you can't get the ones in India to listen, get the ones who left India to listen, and then some of them will come home and actually change things, or use their economic power that they've amassed abroad collectively to change things there. At the end of the day, their parents probably live there. Their uncle probably lives there. Some friend probably lives there that didn't leave, and they want to help them out. They want to change their community. It's always the way that you solve these particular problems. And I know how frustrating it is and how time consuming it is. And you don't measure progress in terms of miles, you measure it in terms of inches. It's painful, but it's the only way you can actually achieve anything over a long arc of time. The South is actually now a pretty good place to live for Africans. It was not in the 1960s and 1970s. So over the arc, you can win. And it's the same for India or for any other regressive country when they have bad policies in that respect. So focus on solutions, solve those problems, measure progress in inches, work with the diaspora, and do what you can. In some cases, you just have to wait for people to die. By the way, that was our Cuba policy in the United States. We're like, we can't change Cuba as long as the Castro's around, so we're just going to outlive them. Then we'll come back. Okay. Well, all right. You were waiting for a while, so short one. No three-part question.
Basically, I'm also from India, but the question is not related to the particular place. So we know we had a World War First, World War Second, that long back. Now people talk about the cyber war, trade war. Okay, so because all the countries have nuclear weapons, so they cannot go with the war. Okay, so they have the alternatives like trade war, cyber war. So how do you think in that perspective that blockchain will make a sense in terms of, I know that it's a decentralized, which is not stay with one country or one geography, but in the nutshell, how do you think like it will help in terms of
Yeah, so war is a consequence of a failure of diplomacy and a failure of communication, and ultimately a failure of agreement. And it used to be quite common. In fact, if you look at the history of Europe, they were always at war at some point, and war was kind of like a sport because they didn't really have sophisticated communication or diplomatic tools. So the only way you really could resolve some issues, go to war for a little bit with somebody, and at some point you'll resolve it. But then what happened is that war got really terrible, so terrible that we started realizing we can't have them anymore. So we started building better diplomatic structures like the League of Nations and the UN and treaties organizations and so forth. So technological innovation is something that gives the nation state new dimensions to work with each other. And in a certain lens, this is something that we're already starting to see. Like, for example, we have common collective problems, like, for example, global warming. And this is not an America problem. It's not an India problem. This is a global problem. And if we do nothing, the poorest people in the world will suffer horrifically from this. Crops won't grow anymore. The sea levels will rise and they'll lose their homes. It's going to be really terrible for a lot of people. So there's a collective global incentive for people to work together. But what they don't want to do is surrender sovereignty. What they don't want to do is say, well, to solve this global collective problem, hand this one actor total control. And then that actor will run everything and be the beneficent leader who will solve your problem. No, that never works. And usually you get that position by killing a bunch of people with a big global conflict and building an empire. So blockchain says, keep your nation, keep your currency, keep your laws, keep your rules. But now we're going to create some sort of system, and that system will force you to comply with a global standard. For example, once all the supply chains get wired together, it's a lot easier to talk about cap and trade, because you can measure carbon output and you can automatically add taxes on imports and exports and create global markets for that. And by making the polluting bad ways more expensive than the non-polluting good ways, you can create a global economy where people can't cheat. So you have teeth in the Paris Accord, for example. What does it mean? It means that you can now solve collective problems so you don't have to resort to violence. That's the only other way of solving it. Whether it be violence with spycraft or violence with cyber or violence with a military action like a drone or something like that. You can have new ways of dealing with people. The other thing is you start depowering empires that use their economic dominance to bully smaller nations. One of the problems with the United States in particular is our country is really good at using the bank as a weapon. You don't have to follow US policy, but if you don't follow US policy and US regulations and laws, you start finding that you can send wire transfers to fewer and fewer places. And you start finding that your passport goes to fewer and fewer countries visa free. And you start finding that you can trade with less and less people until eventually you end up like Iran and you're just totally isolated. Now, some cases that may be wise policy, in other cases it may not be wise policy, but should one nation unilaterally have so much power that they can do this arbitrarily to any country? I would argue no, even though I'm from that nation. Okay? So what blockchain does is it creates new systems where suddenly those levers of control are no longer usable even by nation states. So what does it mean? We now have to talk to each other. and actually go and good old fashioned convince each other that something's a good idea or a bad idea. Communicate, immigrate, trade. And when you trade with people, when you get to understand people, you create common languages with people, you tend not to want to kill people or go to war with them. This was the brilliance of the Roman Empire. Whenever they conquered some place, they forced the locals to start serving in the Roman military, and they integrated all the people into Roman society. They stopped thinking about being Egyptian, they started becoming Roman. Similarly, if you create these systems, you start thinking about, well, how can I dominate this one thing? It's more like, how can we work with these people, trade with these people, and so forth. So it takes time and effort. And unfortunately, there's regressions all the time, and empires never want to give up their power. Usually what ends up happening is they make so many mistakes, they collapse. This is what happened to the Romans, and it's likely what's happening with us in America right now. We went from great leaders like Eisenhower to the Orange Man. We have nothing to fear but fear itself. Believe me, it's bigly. Jesus Christ. No, well, you need to change the Constitution. You can't change anything from the White House anymore. You just can't. It's the worst job in the world because you think you can. Like Obama, when he comes into power, he had 60 senators and a supermajority in Congress. He on a party line could pass a law that we all have to wear purple hats on Tuesday. Just Democrat, Republican could have won that vote. Yet he couldn't stop Wall Street. Like everybody agreed, Wall Street screwed up. These people should be in jail. They took $100 million bonuses while they burned our entire economy to the ground, and not a single one of them went to jail. Well, no, that's what Trump did. Obama, he just let him go. Every president has a kicking person. Every person blames somebody. And Occupy Wall Street came out because people were so angry, right? So if you can't change it when you have a Democratic mandate and a supermajority, the system's fundamentally broken. So the presidency is a useless job. We need to change the Constitution and change the way we elect our presidents. It should be a system where every state elects a delegate, and we have a runoff, and we actually have like a playoff style system, and they gradually percolate up to a winner. We need to get rid of all this investment in politics. We need to get rid of this private funding and actually have a public system. There's so many different ways you can do things, and all these great political theorists have developed much better voting systems. And it turns out the very same things we designed and developed for the cryptocurrency space could work for democracy. Why? It's the same problem of getting consent to fund something or getting consent to change Bitcoin or a protocol could be reapplied to a government. That's the magic of what we do, is we're kind of doing a trial run with billions of dollars behind it, try changing new social systems for corporate governance and for nation state governance. And at some point, the American people will wake up and they'll be very tired of having Trump as president or his successor as president, because it keeps getting worse every election. And we'll try something new. We'll replace the government. What's that? Oh, I love Ron Paul. I used to work for him back in 2007. Ron Paul, the man so nice, we named him twice. Anyway, you've been a great audience. Thank you so much. Oh, no.